Stocks and gold up for the day, bonds are down. Let's jump right into these charts. Looks like we see the magic of the weekly vertical crossover coming into effect. Possibly we're going into the first full week after the weekly vertical crossover occurred. Those of you who are receiving the texting service, of course, were told. Those who listened to the comprehensive review and forecast, we always announce those things, were told over the weekend. And of course, we started watching the charts for an entry point on Monday. We see the derivative oscillator gaining upward momentum, the price percent oscillator heading up on that weekly chart, green up candle. We go to the 2-day chart, and of course the derivative oscillator is losing momentum, but price is starting to move up on this latest 2-day candle. This is just the first day of the latest 2-day candle, green open box up candle. Price percent oscillator is actually ticked over, going up a little stronger than it had been before. It's just the first day. We'll see how that finishes drawing. But let's dig in deep on the 4-hour chart. Strong up movement in the morning, even stronger in the afternoon, up 1.58%. That's a nice big up day. Not quite enough to cross over. We'll see if this continues, and we may have a jumping in point. So get ready to possibly jump into a practice trade around noon tomorrow if we have an up movement passing through on that 4-hour chart. May happen, may not. It already happened on the 2-hour chart. I know some of you like to look at that, but again, the 2-hour chart moves usually in 2-hour increments, right? So not as strong, not as big a wave. It could work here, but again, the 4-hour chart is what we typically go with. That's what we're looking for. Let's see if that occurs over the course of the day, over the next couple of days, over Thursday and or Friday. It may roll back and really not cross. It may take longer. It may not happen at all, but we'll let the trends lead us, right? The trends are what we go by. So let's go now. The Q's up 2.54%. That's a big up movement. Even so, again, the candle, not that big so far in the week. It is a green up candle. We did have that weekly vertical crossover, derivative oscillator gaining upward momentum, price percent oscillators heading up nicely. So things are setting up possibly. Look at the 2-day chart. Derivative oscillator continuing to lose momentum, but again, it's an oscillator because of the sideways slide over about 6 days. That's what's causing that oscillation. The price percent oscillator, however, is heading up, which is our main indicator. And we look at the candle, green open box candle, actually pushing, let's see, pushing as high as it did all the way back on Friday the 18th. So we'll see if this continues as we dig a little deeper into that 4-hour chart. Lots of up movement in the morning, even more in the afternoon. But even with that, not enough to cross over, getting closer. Derivative oscillator still negative, just like on the S&P 500. Perhaps in the morning or afternoon on Thursday, we'll see a crossover on the 4-hour chart. Now remember, we weren't able to jump in on Monday morning. Why? Because the market took a nosedive after the weekly vertical crossover. That happens. That's okay. If we can't jump in at 10:30, then what do? We revert and wait for a 4-hour crossover going up. That's the rules. You want to know more about those rules? Buy the book. You can see the link in the show notes to do that. We're in the 8th printing right now. We appreciate all the support and help. I do have a shout out too to our Patreon members. I'm recording for you the special training that we do once a month. I've gotten some folks to respond. If you have any specific stocks or ETFs you want me to review for you, I will be happy to do that. We're going to have that coming out this week for you. And again, appreciate the Patreon sponsors at all levels. Thank you so much. And have any questions or concerns, again, write us, let us know. cw@chartingwealth.com. Patreon members, tell us what charts you want us to review for you in the monthly review. You want to be included in that list? Become a Patreon supporter. Okay, folks, going from 20-year, going to 20-year bonds from the NASDAQ 100. What do we see here? Sideways slide going on, actually down for 2 weeks, and then this going into the second week of a sideways slide tending up. We see the price percent oscillator heading up as the derivative oscillator continues to lose momentum. 20-year bonds were down for the day 0.07%. We are in a confirmed up move on the weekly chart, but as we go from the weekly to the 2-day, that, of course, is where you see that we have that little schizophrenia. We've got the weekly up and the 2-day down means no trade. We're waiting to see what's going to happen. Is the 2-day going to be enough of a drag to pull the weekly over, or is the weekly going to be enough of a pull up to eventually, with price movement, pull the 2-day back over to get into some kind of trading position? Yet to be seen. Still negative there, so we don't have a trade. Derivative oscillators losing downward momentum, but that price percent oscillator's still heading down. But we do see price movement really going along sideways more than anything. It hasn't topped where it hit back on Friday the 25th. So we'll continue to watch there on the 2-day chart. What about the 4-hour chart? Well, it is continuing to, again, slide sideways, up some in the morning. Doji, meaning lots and lots of indecision in the afternoon. Never has spiked as high as it did back on Thursday the 24th on that 4-hour chart. So we'll just wait and see how things settle out there. Lastly, as we always do, we go to gold. Gold up 0.57% for the day. Nice green up candle forming in gold for the week. We see that the derivative oscillator is about flat. Price percent oscillator heading up quite nicely. We go from the forming weekly candle to the forming 2-day candle, the first day of this latest one. Again, crossed over going up, if you will recall, back on Tuesday the 29th, just the first day of the latest 2-day nice green up candle derivative oscillator. Not gone positive yet. Price percent oscillator, of course, is heading up with that crossover. And we go to the 4-hour chart. What do we see there? Well, we've not had a jumping in point yet. In order for us to jump in after the 2-day crossover, we've got to have a pullback, because that's the only safe way to jump in. You don't want to just jump in for jumping in's sake, because you can jump in at a top and get screwed. That's why we wait for a pullback. That means movement in the opposite direction with a crossover, in this case going down on the 4-hour chart. And then when it crosses back over going up, we look to hop in and do a practice trade. So we're waiting for that to occur as gold continues to go up nicely. That's where we are, folks. Again, remember, watch the S&P 500 and the NASDAQ 100 tomorrow and see if there's a jumping in point for a practice trade after the weekly vertical crossover from last week. Again, we appreciate our Patreon members. And if you don't have the book, please buy it. Thank you all for your support. God bless. All the best from the whole team here at Charting Wealth World Headquarters.